Welcome friends. Today is a weekly weekend holiday, so the stock markets are closed. But this Sunday is actually a great opportunity for us to learn and prepare. The Nifty has crossed its historic 24,000 mark, and today we will study this massive milestone. We will analyze the seasonal late June patterns, understand the global market mood, and look at three fundamentally strong large cap stocks for our research watch list. Let's dive in. Let us look at the numbers. Last week, Nifty reclaimed the 24,000 level, but Sumit Bagadia from Choice notes a weekly doji pattern showing some indecision. Globally, S&P 500 futures fell 0.5% due to US-Iran peace deal hurdles, while Asian markets like South Korea's Kospi fell 0.5%. This mixed global mood suggests a cautious, range-bound reopen for our Indian markets. Historically, the late June period is very interesting. Data shows a seasonally strong upward bias for Indian equities. In fact, the Nifty has closed positive in 6 of the last 10 years during June. While there is short-term technical caution around the 24,000 mark, mid-cap and small-cap indices often outperform the benchmark this month. This historical trend shows that buyers tend to accumulate quality stocks during minor dips. When the market opens, we must watch two critical triggers. First, diplomatic developments in Switzerland regarding the US-Iran peace treaty starting June 22nd will dictate global crude oil direction. Second, we must track the rebound trajectory of Indian IT stocks like Infosys and TCS on June 22nd following Accenture's weak revenue guidance. Mark these key events, friends. Knowing what is coming next puts you ahead of the market. Now let us move to our educational watch list. This is purely for research and learning, not investment advice. Our screen focused on large cap leaders with a return on equity above 12%, a price to earnings ratio under 35, and comfortable debt levels. These three businesses show incredible operational resilience. Let us study their fundamentals and recent news carefully to understand how high quality companies manage their capital. First on our research watch list is Tata Consultancy Services. With a massive market cap of 7,68,844 crore rupees, TCS boasts an exceptional return on equity of 48.4% and a low debt to equity of 0.1. The Hindu reports TCS is making a $70 million legal provision in Q1 FY27, but its long-term operational strength remains worth studying. Next up is Coal India, a major player in the energy sector with a market cap of 2,78,124 crore rupees. It trades at a low price to earnings ratio of 8.9 and has a solid return on equity of 28.1%. According to PIB, Prime Minister Modi recently laid the foundation for their 25,000 crore coal to ammonium project. It is highly worth studying. Third is ITC Limited, a consumer defensive giant with a market cap of 3,66,487 crore rupees. ITC has a return on equity of 29.3% and near zero debt. The Economic Times reports a mild recovery for ITC shares from their 52-week low of 275 rupees. Its capital allocation across FMCG and hotels makes it excellent for our research watch list. How should you research these stocks, friends? First, go to the NSE website and download their latest annual reports to study the management's commentary. Second, compare their operating margins with industry peers on financial portals. Third, visit the SEBI Investor Education website to understand basic financial ratios deeply. Do not rely on tips or rumors. Developing your own research habits is the only way to succeed. Please subscribe to AJ Finance Family and like this video. Now, the mandatory disclaimer. This video is for educational purposes only and is not investment advice. I am not a SEBI-registered investment advisor. The stocks discussed are an educational research watch list, not buy or sell recommendations. Investments are subject to market risks. Please do your own research and consult a SEBI-registered financial advisor before investing.